Hello. Hi, Sumant. Hello.
Hi, Gaurav.
Hi.
1 minute. You want me to come online?
Yeah, yeah.
Okay.
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 My voice video is clear.
Yeah. I can.
Okay. So I'm recording this session so that you can use it for future reference.
Okay.
Okay. So tell me what all you know. Based on that, I'll start because we have to start from beginning, right? So
Yeah, you can start from beginning. A bit of uh, market. What is it called? Trading, but
technical
not an
analysis.
expert. Yeah, technical analysis.
Yeah.
I know a little bit of fundamental analysis, all that, but technical never tried. I just know how to get.
Fundamental is not useful actually in these days because we have lot of volatility and all those things are going on. So fundamental is not any more useful now.
Right, correct.
Right. So we will start with technical analysis so that we can use it in FNO, future and options, because that is basically the base for FNO, right?
Okay.
So in this class, we will talk about technical analysis, indicators, patterns, and then we will talk about some FNO basics, which you can still use for FNO trading. But apart from that, we have certain advanced strategies that we have to use for FNO, but that is basically a different thing, right?
Okay.
So one second, I'll just share my screen. So you have any idea about candlestick?
Yes, I do know a little bit of
Okay.
candles.
Okay.
uh, Opening, closing, the width.
Okay.
So
Okay.
that part I know.
Fine. So apart from that, do you know about you already know about the timings and stocks like large cap, mid cap, small cap, all those things you know, right?
Yes, those things are aware of.
Fine. Then we'll start with candlestick directly.
Okay.
Just share my screen. Second. The types of trading, like how many types of trading we can use.
I am aware of swing and what is it? Long term, all that, short
Okay.
term, day, intraday.
So that almost same only. There is one more thing you can add it in your dictionary like scalping. So scalping is kind of very quick trading, right? For 1 to max 5 minutes, we have to finish the trade. So that is called scalping.
Okay.
That is basically for the traders who are having huge capital, right? So they are using 10 lakhs, 15 lakhs, 50 lakhs, 1 crore. So mostly they do scalping. Like they trade or they scalp for 1.2 points, 3 points like that. Right. So that is called scalping.
Okay.
Okay. And there is one more trading that I'm using for around 2 to 3 years, which is called basket trading. Right. So that I'll explain you first. Basket trading. So basket trading is a kind of very safe strategy in which you have to select the basket of a stocks, right? You can select multiple stocks. Minimum you need to select 10 stocks in that, okay? And
Okay.
maximum you can select any, whatever you wish, 50, 100, whatever you wish, you can choose it, right? So what we do in basket trading, we use stop loss for whole basket, right? Like normally we use stop loss for a single stock, right? Let's say we buy a stock at 100 rupees. So what we do, let's say we put a stop loss of 90 and we keep a target of 120, right? So same thing here in basket trading, we will use it for full basket. Like if we have taken 50 stocks, then we will use the stop loss for 50 stocks only. Like one stop loss and one target, right? Let's say I have prepared a basket of 50 stocks. Okay. and each stock I have invested 10K. So one more point you need to know that in basket, each stock you have to invest similar amount, almost similar amount, right? Like 10K or 15K in each stock you have to put it, right? So let's say you are putting 10K in each stock, so that will be around basket of 5 lakhs, correct?
Right.
So on this 5 lakhs, we have to put a stop loss. Like let's say I want to put 1% as stop loss and 2% of target, right? So whenever the basket shows me 1% loss, then I will exit. Or if that basket shows me a profit of 2%, then I will book my profits. So the basket trading will work like this. So same thing you can use even in future and options also. So that I will explain you later how to use it in future and options, right? So this is basically you can use it in stocks, right? So these are basically the types of trading, correct? So this is clear. Any doubt in this?
No, nothing.
So, so
So
money,
in the basket, you select stocks are similar, or it's up to you to decide.
actually,
Uh,
we need to use a similar strategy, but you can decide whether you want to take large cap, mid cap, small cap. It is up to you,
okay.
right? So you have any idea about risk management, money management? So money management, I have told you earlier, right? So you have to invest like similar money in all the stocks. If you are investing, let's say in US market, you are investing 1 lakh, right? So every time we have to keep one amount, right? Like 5K or 7K. So we have to invest the similar amount in every stock each time. And maximum 62 or maximum 80% capital we can use at a time. Because sometimes we may need to do a cost averaging also, right? We have to buy on dips. So that's the reason we have to use maximum 70 to 80% of the amount at a time. 20% or 30% we need to leave it for doing the averages or for doing adjustments, you can say. Right. So, but in FNO, we have a separate money management rule. In FNO, you can use maximum of 50% capital at a time, not more than that. So
Okay.
this, so this I will explain you in detail later, but this is the thing that you need to remember. Right. And risk management, you know anything about risk management? You follow risk management, anything?
Yeah, obviously, risk management is part of this trading, right?
Yeah,
Uh,
it's a very
you have
important.
to protect. You have to exit uh, when necessary to
Yeah. Because see, I have seen that many of the traders they don't use or trader or you can say any kind of investor also because risk management is valid for both, whether he's a trader or it's a investor, long-term investor, right? So risk management, there are two types of risk management, planned and unplanned. So most of the traders and investors they do this one, unplanned. So they don't have any plans like how to proceed if my stocks goes 20% or 30%. They don't think about that, right? So those things we have to plan. Whenever we are taking an entry in any stock or any future and option, anything, we have to plan the risk and reward ratio, right? So risk and reward means risk means like stop loss or you can say the loss I can take maximum on that trade or on that investment, right? And reward is a kind of thing that we can expect like profits, you can say that the maximum profit I can take on that stock. So there are certain ratios like 1:1, 1:2, and 1:3. So this we need to think about it whether we are a trader, intraday, or swing, or we are a long-term investor also, right? So 1:1 means I am keeping 1 rupee as risk and 1 rupee as profit, right? One is
okay.
to two means I am taking 1 rupee as stop loss and 2 rupees as profit. And 1:3 means I'm taking 1 rupee as risk and 3 rupees as profit. Okay. So mostly for intraday, we do like this 1:1. Mostly for intraday and a trade of 4 to 5 days, we can choose this one 1:1. And if we are doing it for like 1 month, 3 months, or 6 months, then we can choose this one 1:2, right? And for
Okay.
long, like 1 year, 2 years, 3 years, like that, we can use 1:3. So before
So
taking a
10% loss,
huh,
2% profit.
no, it's not percentage actually. Percentage wise works differently. This is basically the rupees you are saying. Let's say you have purchased a stock of at 100 rupees, right? So here,
Mhm.
let's say my stop loss is 90, means 10 rupees. So if you are thinking 1:3, then your target will be 30 rupees.
Yeah.
1, 130 like that. So percentage also you can think of same thing. You can do it like 1%, 2%, or 3% like that. Also you can plan. But see for long term, if you are taking 1% of stop loss, then in that case, 3% will not be much, right? Profit.
No, 1:3 is not like that, right? 1:3
Yes,
is 10
yes.
is to
It is
30.
like
10% is
yeah,
your,
yeah. It is like
okay.
if you are taking 10% as your stop loss, then it will be 30% of your
30.
profit.
Yeah.
Okay. And entry is important, target is important, stop loss is important, and one thing is more trailing stop loss. So any idea about trailing stop loss?
Yes, I think the when the price rises, you have
Uh,
when you exit and your stop loss becomes the whatever you have traded. If it
change.
goes further up, yeah,
Uh,
you have to keep changing your
yes,
stop loss target.
right, right.
So,
So let's say I have made an entry of at 100 rupees and my target is 150, right? And my stop loss was 90. So now my stock is trading at 120. Then I can change my stop loss from 90 to 100. Right?
hmm,
Once
right.
my once my stock reaches 140, then I can change my stop loss to maybe 130. Right? You keep on
Yeah.
trailing the stop loss. So trailing the stop loss can help you making more profits. Okay. So there are three types of analysis. Fundamental, as you already know what is fundamental analysis. Second is technical, that we will talk about charts and patterns and indicators. And third one is sentimental, which is news based. So this we don't use it for trading purpose. Normally, there are some big traders like smart uh, traders or smart investors or big institutions. They mostly do this kind of trading because they already know what is going to happen after 1 week or after 10 days. We will come to know only when the news comes on the TV or when it comes on the social media. They know prior to that only, and based on that, they will take the positions or they will take the trades. So this is not for us because we don't know about what is going to come in future, right? So we mostly use technical, and fundamental is not working anymore because we have lot of volatility and now we have so many traders and investors in the market. Earlier it used to work when we were not using technical analysis and we don't have so much of participants in the market, right? So now it is purely the technical analysis that we have to be dependent on to trade or to invest also, right? So technical analysis, like what is technical analysis, right?
Yes, your behavior of the uh, stock,
Hmm.
like in a day-to-day basis or whatever the time frame that you.
Hmm. So technical analysis basically is a kind of tool that we use to predict the future price based on the current and historical data, right? Because we have all the data which is available since the stock has started trading, right? So data, I meant to say that the price, the volume, the patterns it has formed in the past, right? All those things. So we have to read those data and we have to predict how it is going to behave in future. So this is called technical analysis, right? So to predict or to read this data, we should know about charts, patterns, and indicators, right? So charts, see, there are many types of charts: candlestick, Hikanashi, bar charts, line charts. But the most advanced or the most perfect one is candlestick chart pattern. So most of the traders or investors, they will use only mostly the candlestick because this is basically the real time, right? And it shows all the prices: open price, high price, low price, close price, right? So that is why we use candlestick charts, right? And then we have certain patterns that we will talk about, like hammer, doji, right? Then we have some indicators that we will put it on our charts to increase the accuracy of our trades, right? So like the first is candlestick. On top of that, we will use patterns, and on top of patterns, we will use indicators, right? So these are three things that we will be using in our technical analysis to read the charts to predict the price movements, right? Okay. So we have two types of products here: equity and derivatives, right? So equity is like normal cash, right? You put money in that and you can keep it for long term, right? 3 years, 5 years, 10 years, and you can sleep also, right? So that is okay. This is derivatives. So as it is clear from the name, derivatives. So this is basically derived from equity only. So that is why it is called as derivatives, derived from equity, right? So it has two things: FNO, future and options, right? So these things, the price movements in derivatives, future and options, happens from equities. So the base is equity only, right? So as and when the price moves in equity, these prices will also start moving, right? So that is why it is called as derivatives, derived from equity, right? So I'll show you some examples of equity and derivatives. Then we will start candles in a second. So till now it is clear, right? No doubts, huh?
No.
See, here in NSE India, you can see, right? Equity stocks, the derivatives, right?
Yeah.
ETF, that. So these are the tools which are available. So here, if you go to derivatives, here you can see the, let's take an example of GDFC Bank, right? So here you can see, so the stock has to be available in equity, then only it can be in
Derivatives.
derivatives. But not all the stocks which are there in equity are a part of derivatives. Only the top stocks which the SEBI sees that they are applicable for derivatives, they will only allow it in FNO, right? Like HDFC Bank. So it's a part of Nifty 50. So that is why this stock is available in equity as well as in derivatives, right? And if you see the price, like in equity, right? Wait, I'll show you in Demat account, then it will be clear. So just log in. You can see my screen now.
Yeah.
See, now I have filtered out the HDFC Bank, right? So you can see that the first one is HDFC Bank. So it is showing HDFC Bank only because this particular instrument exists in only in cash or equity, right? So if you want to buy, you can just click buy and sell, and you can buy it whatever quantity you want to buy it, right? Same thing, it available in FNO also, right? You can see that HDFC Bank May future, June future, and July future, right? So in
Okay.
India, we have only the 3 months expiry available, means like current month is May, June, and July, right? So you can
Hmm.
take a contract of maximum 3 months from today, right? So, you will find FUT, whatever stocks are available in future and options, you will find the name like this, FUT, right? And price, you can see that the price will be different, right? So the cash price will be less always, most of the time, and the future price will be more most of the time, right? As you can see, 776, 768, and 772, right?
Okay. So what does
So
it say?
yeah.
So why is it like that? The June there is 768. Is that the prediction or
Uh, the traders have done some contracts like that, the currently the uh, price of June will be trading around 768. So they are thinking that the price should go to 768 in June. But since we have time, the price may keep on changing in between because still we have 2 months remaining, right?
Hmm.
And for stocks, we have monthly expiries. Like for May, the contract will expire at the end of the month. For June, the contract will expire at the end of the June. And for July, it will expire at the end of July, last Thursday of every month.
Okay.
So if your prediction is correct, then you will earn profit. If your prediction is wrong, your money will become zero. So it's a kind of contract between a buyer and a seller. So that
Okay.
prediction you have to do, or you have to use technical analysis, candlesticks and charts to predict, because you have to read the historical data and you have to predict the future prices after 1 month where the price will be based on the technical charts. Right. So see, earlier when we didn't have these softwares and all, they will do hard copy contracts and all. But now we have all the soft copies. So we have all the digital contracts through brokers. Right.
Okay.
So it will show like this in futures, and under futures you will have different options, right? So that we will talk later. So I just want to show you that how the equity and derivatives looks differently in your demat account.
Okay.
Charts will be available for all, whether it's future or cash, right? See, this May future started trading like when? It started trading in the month of February, right? So February, March, April month. So it will show you chart from here only. Prior to that, it was not trading, so it will not show you the chart prior to that, right? But to trade in futures, you have to see the chart only from the cash. So this chart normally we don't see. Whatever is available in futures, it is just for the sake of that the chart is available. That's it. But to predict, we have to see the chart only from the equity because it is basically derived from cash stock only, right? So based on the cash stock movement only, these things will move,
Okay.
right? This clear? Any doubt in this?
Bit confused actually. You said
Uh,
uh, this future
uh,
derivatives will be there for 3 months, but expiry happens every month.
3 months means like my current month is May, right? So this will be available of June and July, May, June and July. And once we move to June, then we will have June, July and August. And once we come to July, then we will have the three contracts, July, August, September. So like this, it will be there.
Okay.
So maximum for 3 months, the contract will be available. So you can do a contract maximum. Now, if you want to do a FNO contract, you can do maximum till July.
Okay. I can take up to July. The contract
Yes.
will remain same.
Means if you want to buy or sell, then you can buy or sell maximum the contract which is available till July. You cannot buy September and all, mostly.
Hmm.
Sometimes it will be there, but there will not be any liquidity. So if you buy it, you won't be able to sell it easily because the liquidity is not there. So mostly they are talking about the liquidity. So May, June, and July will have the maximum liquidity as of now.
Okay.
Okay. So let's say you have seen the chart and you think that by July the stock price can go to 790. Then based on that you can take a contract of July.
Okay.
Want to take more time, right? Because in future and options, the mostly the thing is of timing, right? Because we have every month we have the expiry. See,
Mm.
cash stocks you can keep it till when you want, like 2 years, 3 years, 5 years, you can keep it. But here you have to exit your positions by the expiry.
I can exit it anytime, correct?
You can exit before the expiry also if you're getting profit, but the maximum limit is till expiry. After
Okay.
expiry, your contract will become zero.
So, okay, the expiry talks about the every month, whatever the value, 770,
Yes.
what is,
Yes. We have to see
okay,
the
that,
value at the expiry date. Like last Thursday is the expiry. Every month, last Thursday is the expiry, right? So on that day, we have
okay.
to see the price. Based on that, the expiry will happen. Let's say you have purchased here the contract at 776 now in the May, right?
Mm. Mm.
So let's say at the end of the May, like month end, the price becomes 780, right? So in that case, you will be in a profit of 14 rupees, right? But 14 rupees, and here we have a thing called lot size. You can see here, like quantity. Means you have to minimum buy 550 quantity,
Okay.
right? So by at the end of expiry, you will be in a profit of 550 into 14,
Mm.
right? And if the price goes to 756, then you will be in a loss of 550 into 20.
Right. Okay.
So that way here it works based on the lot size. You have to minimum buy 550, or you have to buy 2 lots, 3 lots, 4 lots, 5 lots, like that it will work in futures.
Okay.
Okay, this
So when
clear?
you buy this,
Uh,
on the limit, what is the value it will be? It will be 776. I
now
just want to see. Huh.
now if you
Right now,
buy
what is
the
the, no, no, there is a market and the limit, right? While buying.
uh,
That's we generally use for equity. How does that work for
same
derivatives?
same same
Same.
same thing, same concept.
Okay.
The concept is same because it is
Uh,
anyways coming from the cash price only, but the only difference here is the lot size. So there you can buy one quantity also, but here you have to buy minimum 550 quantities.
okay. The required capital is 75 there for 550. How is that?
So which one? This one, 75,604.
Yeah.
See, normally the capital will be like 550 into 776.
7.
Yes.
Right.
But it depends on the broker. If sometimes they are giving you margin, then it may be less
Okay,
also.
Mark. Okay.
See, here it is coming 4,26,800, right?
Where? The screen are you
Calculating.
sharing?
Yeah.
Okay, okay,
You
calculate.
multiply 776 into 550, you
Okay,
will
got
get around
it.
4,26,000, right? So
Uh,
it depends on the broker. So here maybe broker is giving me some margin. That is why the capital is required is less, right? 75,604.
okay.
Fine. See, there are many things. If you are using the margin, there are many things that you have to take care of on every day, right? So that
Yeah.
I will
Yeah.
explain you later. Some keywords that you have to remember while taking the margin and all. Right.
Mm.
So this is clear, right? So this is clear. We have a separate entity for futures,
Entity.
right? Right.
Yeah.
And then we will have a separate entity even for options, right? So like this. See, HDFC Bank May 780 CE, 780 PE, June, July, right? Strike prices, different
Mm.
strike prices for each strike. See, they have see for every stock they have defined a different strike price. So like HDFC Bank, I think it is like 770, 780, 790, a difference of 10 rupees for HDFC Bank. So for if you go for Reliance, it may be different. If you go for Infosys, it may be different. But these are called strike prices, right? So these strike prices works for options.
Okay.
Okay, so this is how it looks like for options. I will add here. See. So similarly, we will have 750C, 750P, 740P, 740C. Like that, we will have all the strike prices.
Okay, I didn't get it, but let's see. So what is that 19.30? How does...
That I will explain you later. So that is basically the premium. So that we will talk in detail.
Okay. Okay.
So here I just want to show you how it looks different.
Hmm. Okay.
Okay, fine. So now we'll start with candles and then we'll proceed once again. Okay, so basically there are two types of candles. One candle we call it normally as bullish, and the other one we call it as a bearish,
Very
right?
good.
So most of the softwares will show bullish candle in green and a bearish candle in red, but there are some softwares which shows a green candle instead of white, or black instead of red, right? So that is just for the
Okay.
visibility, right? So bullish and bearish. So every candle, irrespective of color, irrespective of size, irrespective of length, they will have four prices: open price, high price, low price, and close price. Four
Close.
prices within each candle. So open price, as you know, the market opens at 9:15. So this price will be counted as open price. Close price counted as 3:30, right? Apart from that, in during the day, whatever changes that happen, the highest price and the lowest price will keep on changing in a whole day. And at the end, whatever be the highest price of the day, they will record it, and whatever the lowest price of the day, they will do a recording so that we can use it for future purpose. So same thing in bearish candle also, four prices: open, high, low, and close, right? Apart from that, the structure looks like this. It has a upper wick, the lower wick, and a body. Here also upper wick, lower wick, and the body. So basically, the body denotes the volume, right? The stronger the body, the stronger we think the stock price is strong at that time. If the candle is green and the this body is solid, we will see that we'll think that the stock is in bullish mode. Right? So there was a lot of volume in the stock. Somebody might have purchased it. Right. Same thing in bearish candle also. If the body is very big or the body is very red in color, then we'll think that there are some sellers in the market, right? So that is how we differentiate between a bullish and a bearish candle, right? And these are the upper wicks and lower wicks here, right? So these are, if you see in a bullish candle, these basically we call it as these are the sellers. These are basically called as sellers. They are basically called as buyers. This, right? Means the price here, the price might have gone till here, but after that somebody might have sold it. That is why we have formed a upper wick. Same thing here also. If there was a seller, they might have sold till here, but certainly after certain time there was some buyers. That is why it has formed a lower wick. So these are basically the buyers, right? If there are no wicks, then we will call it as a bullish Marabozu candle. If there are no upper wick or lower wick, it is full green candle. We call it as a bullish Marabozu. That means there are no sellers, only buyers are there. Here also similar thing. If we
Perfect.
have full red candle, we call it as a bearish Marabozu. Means only sellers are there, no buyers will be present. Right. So basically, it's a game of It's a game of buyers and sellers in the candle. It's a game of volume. So based on the volume, the candle size and the shape will keep on changing. Right. Clear? I'll show you on chart how bullish and bearish Marabuzu looks like. So till now it is clear, right?
Yes.
Okay.
So far, so good.
Okay. Have you used this software earlier, TradingView?
Yes, I had used,
Okay.
but right now I think my is it paid version, right?
No, free version. I use free version only. Okay. So here we have, so if you want to use it, you can put the name of the stock here, Nifty or whatever stock you want to see. Then once you put, it will show you the chart like this, right? And then here
Mhm.
we have certain time frames, right? Like which time frame you want to choose, you can select it. So let's say I'm choosing 1 hour here, right? So I'll show you bullish and bearish Marabuzu. See these candles, right?
Bearish.
This is mostly the bearish Marabuzu. See a little small wick is lower wick is there, but it's okay. We can consider it as a bearish Marabuzu. And this one is bullish Marabuzu, right? So these candles look like very strong candles, right? And then after that, so these are the two basic candles, and then we will have a candle called hammer. Hammer. So the pattern of hammer will look like the same as we use in as we use at home, right? We have seen that hammer at home, right?
Yeah.
So it looks like this. Mostly it looks like this only,
Mm.
like hammer, right? So here in hammer we have basically four types of candles that you have to see on this one. Okay, so we will have to see four types of hammers in the market, right? So this is normal hammer which doesn't have a upper wick. Here we have a hammer which has a upper wick. This is called inverted hammer. This is also called inverted hammer without the lower wick, right? So these are the four candles that we have to see as a hammer. So hammer is basically a reversal candle, right? Means whenever the stock is coming down, at that time if a hammer is formed, then we will think that from here the up movement or the upper trend may start, right? Let's say the stock is coming down like this, right? And then we will see a hammer has formed here, correct? Then after that we will think that there will be a reversal in this stock. So that is how we find a bottom, and then we will buy that stock based on the hammer. So this hammer can be of any four of these. So we have to
So in inverted in the sense the downtrend will start, right?
no. We have to see the stock if the stock is coming down, and we have to find only these hammers. See, this is a kind of pattern only, the name inverted hammer only, right? But we have to see these patterns here only. Because these are called the reversal candles. You can say that these are called the reversal candle. Means if a downtrend is there and a hammer is formed, then we can see that the stock may move upside.